Breaking news out of the auto industry. Toyota has just dropped a bombshell that's sending shockwaves through every dealership from coast to coast. In a bold and unexpected move, the Japanese auto giant has unleashed massive discounts on its entire truck lineup, flipping the script on the US market and catching rivals completely off guard. We're talking never-before-seen price cuts on popular models like the Toyota Tundra and Tacoma, with savings so steep that even longtime Ford and Ram loyalists are suddenly reconsidering their next move. For years, Toyota has been known for holding firm on pricing, confident in its bulletproof reliability and loyal customer base. But this is a whole different game. Dealers are slashing up to $7,500 off MSRP, with some locations even advertising 0% financing, no payments for 90 days, and bonus cash offers stacked on top. It's not just aggressive, it's unprecedented. And it's sending automakers like Ford, GM, and Stellantis scrambling to figure out how to respond. So what triggered this sudden price war? Sources close to Toyota say it's a strategic strike aimed directly at America's Big Three. With EV demand stalling, gas prices unpredictable, and full-size trucks piling up on dealer lots, Toyota saw a rare opening and took it. Their strategy? Flood the market with competitive pricing, undercut the competition, and scoop up market share while rivals are still trying to unload 2024 inventory. And let's not forget, Toyota's Tundra was just redesigned with a twin-turbo V6 and hybrid option, meaning they're not just offering better prices, they're offering better trucks. The impact was immediate. Within 48 hours of the announcement, Toyota dealerships in key markets like Texas, Florida, and California reported surging foot traffic, with customers lining up to lock in deals before inventory runs dry. One dealership in Dallas reportedly sold out of Tundras in 2 days. In Phoenix, another dealer extended its hours just to handle the wave of buyers. People who were on the fence just a week ago are now rushing in, fueled by online buzz and word-of-mouth excitement. Meanwhile, Ford and Ram dealers are feeling the pressure. Sales managers are being told to match or beat Toyota's pricing, whatever it takes to keep customers from jumping ship. Some Ford dealers are now offering surprise markdowns on F-150 models, while Ram is reportedly preparing a counteroffensive that includes aggressive lease deals and enhanced trade-in offers. But the clock is ticking. Every day, Toyota's trucks move off lots. Their competitors are losing ground. What makes this even more stunning is the timing. Just months ago, analysts were warning of a cooling truck market. Consumers were tightening their belts, interest rates were climbing, and manufacturers were struggling with excess inventory. Now, Toyota has flipped the entire narrative. Instead of scaling back, they've gone all in, betting that bold pricing will fuel demand even in a softening economy. And so far, it's working. But what does this mean for you, the everyday consumer? Well, if you've been holding out on a new truck, this may be the best opportunity in years. These aren't just holiday sales or leftover clearance deals. These are full-blown price corrections designed to win market dominance. Whether you're eyeing the full-size Tundra or the mid-size Tacoma, you're looking at thousands in potential savings, plus incentives that make financing far more accessible than anything we've seen in recent memory. Toyota's gamble is already shifting consumer behavior. Forums are lighting up with posts about trade-ins, buyers sharing deal sheets, and even Ford fans admitting the Tundra is suddenly looking like a bargain. And if you think this is a short-term stunt, think again. Insiders are hinting that Toyota is ready to extend these offers deep into the next quarter, possibly longer, depending on how competitors respond. And here's where it gets even more interesting. Toyota isn't just playing defense. They're launching an offensive assault on the very foundation of American truck dominance. And the implications go way beyond just pricing. With the Tundra now boasting advanced hybrid tech, enhanced towing capacity, and a redesigned interior that rivals luxury SUVs, Toyota is positioning itself not just as a value leader, but a performance innovator. They're not merely offering cheaper trucks, they're offering better trucks for less money. That's a nightmare scenario for domestic automakers who've long relied on truck profits to float their balance sheets. The F-150, Silverado, and Ram 1500 are cash cows, vehicles that carry the financial weight of entire brands. When a major competitor like Toyota starts eating into that segment with brutal pricing and strong product, alarm bells go off in executive suites from Detroit to Auburn Hills. Ford, GM, and Stellantis now face a critical question. Do they drop prices and risk slashing profit margins, or hold the line and risk losing even more customers? And then there's the ripple effect hitting used truck prices. As new Toyota trucks become more affordable, used truck values are taking a hit. Auctions are already reporting softening bids on 2 to 4-year-old trucks, especially in the half-ton segment. Dealers who were once confident about flipping used Tacomas or Tundras for top dollar are suddenly rethinking their strategy. Inventory that would have sold in a weekend is now sitting for weeks. It's a chain reaction. New truck discounts drag down used truck prices, which in turn pushes more buyers toward new inventory, amplifying the problem for competitors. Fleet buyers and commercial operators are also jumping in on the action. Several rental and construction firms are reportedly retooling their orders, shifting away from traditional choices like the F-150 and Silverado toward discounted Toyota trucks. One logistics company out of Atlanta allegedly canceled a 40-unit Ford fleet order to capitalize on Toyota's surprise deal. For high-volume buyers, even a $1,500 discount per truck means massive savings, let alone the $5,000 plus cuts Toyota is offering in select regions. All of this has sparked panic in boardrooms and war rooms alike. Marketing teams are working overtime. Incentive departments are running forecasts. Dealer networks are demanding clarity. And yet, no one saw it coming. Not like this. Toyota has always been the quiet giant, calculated and steady. But this move? It's aggressive. It's disruptive. It's the kind of tactical maneuver that reshapes markets and rewrites playbooks. Even Wall Street is reacting. Analysts are now reevaluating forecasts for full-size truck sales across North America. Some believe Toyota could capture as much as 5 to 7% additional market share in the truck segment this quarter alone if current trends continue. That's not just impressive, it's historic. And if Ford and Ram don't respond fast enough, they risk losing customer loyalty that's taken decades to build. Consumers are starting to ask the real questions now. Why is Toyota slashing prices when others aren't? Is this a sign of desperation or a bold power play? Is Toyota overstocked, or are they outsmarting the market? The reality is far more strategic than people realize. Toyota spent years building out its supply chain resilience. While other automakers struggled with chip shortages and logistical delays, Toyota quietly stockpiled inventory and built out dealership capacity. Now, they're reaping the rewards. And while competitors are still trying to fix backlogs and reduce bloated lots filled with unsold 2024 models, Toyota is already repositioning its trucks as the default choice for practical, value-focused Americans. It's not just a price drop, it's a shift in perception. They're sending a message loud and clear. We're here, we're ready, and we're coming for the crown. The next few weeks are going to be critical. Will Ford unleash deep rebates to keep pace? Will Ram double down on financing offers? Will GM break from tradition and launch emergency markdowns on Silverado units sitting idle in the Sunbelt? No one knows for sure. But one thing is crystal clear. Toyota has lit a fire under the entire U.S. auto industry, and now everyone is watching what happens next. Dealers, analysts, fleet managers, and everyday drivers are glued to the numbers, waiting to see just how far this pricing shakeup will go. The momentum is building, and each passing day adds more pressure to the competition. The big three can't afford to sit still. If they do, they risk hemorrhaging not just sales, but long-term brand loyalty. And let's talk about the psychological shift happening in real time. For years, full-size trucks were seen as exclusive territory for domestic brands, icons of American strength and utility. But now, that iron grip is starting to loosen. Consumers who never considered anything but a Ford or a Ram are suddenly test-driving Tundras. They're finding smoother rides, quieter cabins, and hybrid fuel economy that puts gas-guzzling V8s to shame. And when they see the $5,000 to $7,500 savings staring back at them, the decision becomes easier than ever. The biggest wild card in all of this is timing. Industry insiders suggest Toyota timed this move with surgical precision, right before Labor Day, a period when dealers typically roll out sales events but often struggle to move high-priced inventory. With this early strike, Toyota essentially cut the legs out from under those campaigns. And now, domestic dealers are scrambling to rework promotions, adjust price stickers, and fight off a sudden wave of buyer hesitation. Customers aren't just walking into showrooms, they're walking in informed. They're showing sales reps screenshots of Toyota deals. They're negotiating harder. They're leveraging Toyota's discounts as bargaining chips against other brands. In some cases, Buyers are outright walking away from Ford and GM dealerships if they don't see a comparable offer. And in a market that's already volatile, that level of churn is financially devastating. Another massive domino that's about to fall: residual values and lease pricing. If Toyota's trucks maintain strong resale value while offering low entry pricing, it changes the game for lease customers. Lower depreciation, combined with factory incentives, could mean monthly payments hundreds of dollars lower than comparable Ford or Chevy leases. That's a huge incentive for families, small businesses, and gig economy drivers who need dependable trucks without the crushing monthly cost. The aftermarket world is also reacting fast. Accessory suppliers, off-road outfitters, and performance parts dealers are pivoting toward Toyota inventory, anticipating a surge in demand for Tundra and Tacoma mods. Some of these companies are even launching bundle deals specifically targeting new Toyota truck buyers. This kind of ecosystem shift doesn't happen unless there's a real market realignment taking place. And that's exactly what's unfolding right now. To make things even more complex, Toyota's hybrid-first strategy is throwing a wrench into the traditional powertrain arms race. As rivals push plug-in and full EV alternatives with sky-high sticker prices and limited infrastructure, Toyota is quietly winning over buyers who want better fuel economy without sacrificing convenience. The hybrid Tundra, in particular, is now emerging as a standout, not just because it's more efficient, but because it doesn't require drivers to change their habits. No charging, no range anxiety, just better mileage and more torque right off the lot. And here's something that's beginning to stir real concern in Detroit. Toyota might not stop here. There are whispers, serious ones, that the company is preparing similar discount campaigns for its SUV lineup. Think Sequoia, 4Runner, and even Highlander. If that happens, it won't just be the truck segment that gets shaken up, it'll be the entire utility vehicle market, which is already oversaturated and under pressure. Toyota could turn this summer into an industry-wide price reckoning. If Toyota rolls out those SUV discounts, it will be like dropping a second bomb right after the first one exploded. And this time, the collateral damage could reach far beyond Ford, GM, or Stellantis. We're talking Honda, Hyundai, Kia, even luxury brands like Acura and Infiniti, suddenly scrambling to justify their price tags as Toyota positions itself as the best value per dollar automaker across multiple segments. But back to the trucks, because that's where the heat is right now. We're already seeing early signs that Toyota's bold pricing strategy is forcing massive recalculations inside the walls of competing manufacturers. In fact, one leaked internal memo from a major domestic automaker, which surfaced on an automotive forum just days ago, reportedly warned dealers that Toyota's market share grab may accelerate through Q4 unless immediate incentive adjustments are implemented. That's corporate speak for, we're losing customers fast. Behind closed doors, brand executives are in damage control mode. They're not just reacting to Toyota's prices, they're trying to figure out how they missed this move. How did Toyota keep this strategy under wraps for so long? How did they manage their supply so effectively while others were plagued by production hiccups and delivery delays? The answer lies in years of strategic planning and discipline. While the rest of the industry was distracted chasing EV headlines and over-leveraging on inventory financing, Toyota stayed focused. And now, they're cashing in. Meanwhile, customers are doing the math. Fuel economy, price, reliability, resale value, all of it is tipping in Toyota's favor. Some buyers are even offloading newer domestic trucks just to switch brands mid-cycle. That's almost unheard of. And it's not just anecdotal. Dealer data is confirming a sharp spike in cross-shopping behavior. Shoppers who would have never set foot in a Toyota dealership a year ago are now test-driving Tundras and asking one question: why didn't I look at this sooner? Even rural buyers, typically the last group to shift brand loyalties, are taking notice. In farming towns and work truck communities where the F-150 once reigned supreme, Toyota's aggressive approach is shaking things up. It's not just the sticker price, it's the long-term ownership costs, lower maintenance bills, better reliability ratings, fewer trips to the shop. And now with the price gap closed, or even flipped in Toyota's favor, those practical buyers are starting to make the switch. And the wildest part? Toyota hasn't even fully activated its marketing machine yet. We haven't seen the national TV campaigns. We haven't seen the primetime ad blitzes. We haven't seen the Super Bowl-style brand flexing that could take this local dealer-level momentum and turn it into a nationwide sales surge. When that switch flips, and you can bet it's coming, Toyota's presence in the American truck market could transform overnight from the underdog to the category leader. What we're witnessing is the early stage of a full-on market power shift. Not a seasonal sale, not a flash-in-the-pan rebate event. This is a calculated, tactical campaign aimed at redefining buyer expectations across the board. And if Toyota succeeds, if this strategy holds, other automakers will be forced to rewrite their playbooks from the ground up. And make no mistake, those playbooks aren't built to pivot this quickly. Ford, GM, and Stellantis operate massive, complex manufacturing and distribution networks. Adjusting pricing, reallocating supply, retooling ad campaigns. These aren't overnight changes. By the time they react, Toyota may have already secured a dominant foothold in markets they've historically struggled to crack. We're already hearing whispers from inside dealerships that Toyota isn't slowing down. In fact, some insiders suggest the company is prepared to double down with even bigger incentives tied to trade-ins, especially for owners of rival full-size trucks. Imagine trading in a 3-year-old F-150 or Ram 1500 and getting an additional $2,500 loyalty conquest bonus on top of already discounted Tundras. That kind of move could spark a wave of defections, and not just individual customers, but fleets, contractors, and rural service companies who make bulk purchases. Meanwhile, consumer confidence in Toyota's strategy is growing with every click, share, and review. Social media platforms are flooded with posts from buyers proudly showing off their new trucks, deal receipts, and side-by-side comparisons. YouTube reviewers, truck influencers, and automotive TikTokers are jumping on the trend, pushing the message even further. Why spend $60,000 on a domestic brand when you can get more for less from Toyota? The momentum is becoming viral, and once that kind of energy builds online, it becomes a self-feeding loop of demand and hype. But it's not just the base models flying off lots. Even high-trim, off-road, and hybrid variants are being snapped up, showing that buyers aren't just chasing cheap. They're seeking value across the board. Toyota has managed to make their entire lineup look like a smart buy, regardless of price point. That's the magic of a well-timed, well-targeted disruption. When every trim level suddenly looks like a deal, it's no longer just a price cut. It's a category reset. And let's not ignore the strategic message this sends to Wall Street and shareholders. Toyota is signaling strength in a time when most automakers are treading carefully. While competitors announce layoffs, factory slowdowns, and delayed EV projects, Toyota is taking bold action, showing confidence in its product, its supply chain, and its ability to win over U.S. truck buyers. Investors notice moves like this, and if sales numbers spike as predicted, we could see Toyota's stock value rise while other automakers scramble to contain the fallout. But what happens next could determine the trajectory of the entire automotive market heading into 2026. Will Toyota expand this discount strategy to SUVs and sedans? Will Ford unleash emergency incentives to retain its F-Series dominance? Will GM fast-track a Silverado refresh? Or will Stellantis gamble on slashing Ram prices even further to out-discount Toyota? One thing is certain, the game has changed. Toyota's aggressive pricing strategy has ignited a chain reaction that no one in the auto industry can afford to ignore. What began as a tactical move to gain market share in a competitive truck segment has rapidly evolved into a full-blown industry disruption. The ripple effects are being felt everywhere, from boardrooms in Detroit to dealership floors in Texas, from used car auctions in the Midwest to lease offices in California. Ford, GM, and Ram are now in a high-stakes scramble. Match Toyota's discounts and watch profit margins evaporate, or stand firm and risk losing tens of thousands of loyal customers. No matter which path they take, the balance of power is shifting. Buyers are more informed, more price-sensitive, and more open to alternatives than ever before. And Toyota, the once quiet competitor in the truck game, has just roared into the spotlight with a move that might define the next era of automotive competition. This isn't just about trucks anymore. It's about who controls the future of American roads. Toyota has proven it can deliver cutting-edge technology, unbeatable reliability, and now, unmatched pricing. That combination is lethal. And if other automakers don't act fast, Toyota's trucks won't just be the most discounted, they'll become the most dominant. So if you're thinking of buying a truck, this is your moment. The biggest shakeup in years is unfolding right now. And Toyota, just redrew the map. The only question left is, how will the rest of the auto world respond? Because the race is on, and Toyota just took the lead.